Folks, I have to be honest with you. That price action yesterday and really into the close had me leaning a little bit long today. Did I think it would be because of the Australian bank only raising a quarter instead of a half? Are you ready for a rant on quantitative easing and why we're going to have a $10 loaf of bread? Someone put their money where their mouth is at Berkshire Hathaway. Let's get to it, Mitch.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
Good morning, traders and investors. I don't know what to say. Let's run down the futures, bring in Triple D and Mitch, and they can make some sense out of this. We're up 62 and a quarter handles, 37.5250, focusing on last week's high. We're already back at last week's high, 51 and a quarter. Oh, the buck is dead, down 54.6 cents at 111.11. Gotta like that if you go to 7-Eleven. TLT up 50 cents, 104.33. Crude, they're cutting. Everyone knows it. Up a buck 12, 84.75. One of the biggest 2-3 day moves in gold you're gonna see. Up 11.40 at 17.13.40. Silver's been the champ, not 20 but 21. Up 21 cents at 20.80. Even Bitcoin's getting a little bit of love today. Up 460 at 19 at 985. Trying to get back to 20K. Ethereum, that's up $35.50 at $13.47.50. Let's bring in Mitch. Let's bring in Dennis. And unless Dennis is running out to the store to get a loaf of bread before it goes to $10 a loaf.
Well, this is a free money rally. Let's call this what this is. This is a free money rally. The reason for that, Australia now pivots too. So we've lost the UK. They've thrown the towel in on inflation. Now we appear to be losing Australia. They look like they're throwing in the towel on inflation. So obviously they're looking in the U.S. markets and they're saying, well, maybe Powell will pivot before we start seeing inflation come in too. I mean, if, that happens, that's just terrible. I think we've got to stay the course. I hope Powell stays the course. I don't know. Like I said, I don't think we need to keep going crazy with the interest rate raises, but we need to keep them up here for a while. We can't start thinking about, okay, let's get them up and let's get them down here in 6 months because we need to get inflation in check because I don't want to pay $10 for a gallon of milk. I don't want to pay $7 for a loaf of bread, maybe $10, a little bit exaggerated. But that's the case. If we don't get inflation in check, these prices are killing us. I mean, we are seeing price inflation everywhere on everything. We need to get it in check. I know it's nice to see your stocks at all-time highs, but you know what's nicer? Going into the store and not paying a ridiculous amount of money for food. So that's the trade-off here. I don't mind taking the pain on my stocks if I can get prices back in check. So Powell, please stay the course. Don't listen to these other central bankers. Europe's a mess. Australia following suit. What the news is, they only went a quarter. They were supposed to go a half. So the market's seen as a pivot. So it's seen we've seen two major countries pivot, but U.S. Fed is next.
Well, just like I said it earlier with our meme talk on the Friends kind of pivot, right? You're going to go around the corner and hit a wall if you pivot too quickly. And this is why I don't think that the Fed will pivot quickly. At the end of the day, it's always seemed to me that we run the interest rate decisions here in the U.S. versus elsewhere across the pond, right? They're not going to determine when we're going to go ahead and get back to quantitative easing. I feel at this point, the Fed has made it as firm as can be. They will not change tune until inflation changes tune.
Yeah.
Europe has a whole nother mess here because they're finding financial instability. We're not mentioning that. Have you heard Powell mention any financial instability here? He has not mentioned that. So if you think that you're in the camp that the Fed is going to pivot quickly, Well, I think you're
I don't know
lost
about a
in the
pivot
works.
quickly, but I've been saying this for a long time. Forget about 2% inflation. Okay, we're not going back to 2% inflation.
Oh no.
Okay, 4%. That would be like when I
A
almost
victory,
texted.
big
Yeah,
time.
yeah. There we go. I almost texted you this morning and said, "Oh, is inflation? Did we cut rates already? Is inflation gone?" I mean, that's the way this market's reacting. I mean, I tried to be bullish, last week when we were getting pounded, taking out the June low. And yeah, it's nice to see this follow through, but I'm just like, oh my, I mean, my gut instinct is today is just to pile in and just sell the living daylights out of this market. But I'm not going to, because once the momentum gets going in one way, it's hard to stop it. But man, I sure wish it was like earnings or something a little bit more substantial than, like, when did we ever mention the Australia? We've been doing this show for how many years? When do we ever mention a move by the Australian central bank? Never.
Never. The market is looking for a silver lining, Joel. Let's call this what this is. This market is the silver lining market trying to find a reason to buy stocks. Everybody wants to buy stocks. Everybody
I'd call
thinks
it more of
about
a
the
dream.
all-time highs. What's that, Mitch?
I'd call it more of a dream than.
Well, that's what they want to do, though. They want
They
an
want a
excuse
dream
to buy stocks. We
that
got an
things are going
excuse. We
back.
saw it with UK last week. We rallied like hell, 1,000 Dow points off that UK thing, and then Powell squashed it the next day. I don't know if he's coming and squashing it the next day here or not, but we're doing the same thing again. This market is the dumbest market I've ever seen in my life. And people saying, oh, you're just mad because you're short. I'm long this market. We know that. Yes, I have 40% cash, but I'm 60% invested. I'm market neutral right now in my trading portfolio. So stop with Dennis wants the market down because he's short. He's not short. I'm not short. I've been saying it's oversold, so it's hard to be short this market right now. So for this simple reason. But I mean, if we get to a point where all these central banks throw in the towel, we could go back to all-time highs, but you're going to see your prices at your store double on everything. I don't want that. I want them to get inflation in check because I'm sick of going into a restaurant and paying, I go to McDonald's on the weekend. Like, do you see the McDonald's prices? I go with the two kids, Happy Meals, and me, burger, wife, burger. It was $38.
No way.
In Canada. So that's
30,
$30
well, okay,
US.
30
You
bucks.
got to knock the 30% off because we're Canadian
Right,
dollars.
I got you. But still, 30.
$30 for a family of four, $30 US for a family of 40 at McDonald's. I mean, this was $18, $20 pre-COVID. The prices are up 30, 40% at McDonald's. They got to be. So, I mean, I'm just going and saying, and people saying don't eat at McDonald's. So you can do it's the point. It's the point. If I didn't have kids, I wouldn't eat at McDonald's, but they demand it. But it's the point here. Mitch, are you with me here? I mean, I'd love to see the markets back at all-time highs with 4% inflation. Like, forget about 2. That's cool.
If got
the markets
a hot
go back to all-time
CPI
highs because the Fed pivots, that's not cool.
We got a hot CPI data, right? Or less than expected move, right? And then we got PCE that came in hot also. What are you guys thinking? Inflation hasn't turned around.
Nothing.
I can't believe that people are still in this camp that they just think that the Fed can pivot without inflation going anywhere. It hasn't gone anywhere with the amount of rates that they've hiked. Yes, it has a lagging effect.
It takes a little time, though, Mitch.
It has a lagging effect.
It takes
time.
It
has a lagging effect.
Blue
you got to
hit us aside ahead with that a couple. When did Blue tell us that, Dennis? When did
early?
2 CPI reports ago?
Yeah, like in June or July.
We know it can take time. Go ahead, Mitch.
Yeah, I think that was in June or July. And so he said like about 6 months, right? And so, I mean, at the end of the day, there's way too many headwinds above. There's just not anything that points to me that we're just going back to the growth stocks. We just want to go back to all-time high. I think this is hopium. I think this is the bulls just being tricked. And this is how you end up getting capitulated. You end up thinking that it's the bottom, and then you get flushed out one day. And I think at the end of the day, with comments like we're getting today from the White House is set to reveal, the U.S. is set to reveal new fresh policies on Thursday aimed at choking off China's access to advanced chip manufacturing technology and the chips themselves. Efforts so far to date have included notification letters to chip companies and tool makers advising them on new limits on sales. How do you think this is going to react in the long run? If you take away the chips from China and we start making them here, guess where inflation's going? It ain't going down. Let's just be honest about that.
If we start producing everything over here, which is what I think actually needs to happen, we're going to have a lot of short-term inflation because we don't work. We already said this. In North America, we don't work for $2 an hour. They do in China. So it's a big difference. So that's why we get all our goods. That's why you go to Walmart and everything is made in China. That's why you go into Target. Everything's made in China because they work for $2 an hour. If we start producing all of our stuff over here, it's going to change the game. So yeah, we're going to see significant price increases. But again, if we got this East versus West thing going on and it's not going away and we're going to deglobalization, that might be where we're going. So, I mean, the whole point, and to Joel's point, bringing it all the way back, is it does take time. So the Fed has raised significantly, and I do believe that there's a risk here that they go too much too fast and it hits us all at once. So I kind of get that. And maybe what these central banks are doing is saying they've already won a lot. Let's just wait a little bit and see what works. But I think you kind of got to stay the course. You've kind of dictated the course. Don't start all of a sudden getting away from that. I mean, I want to see, this isn't a North American problem. This is a world problem, this inflation. I want to see the prices get in check. I don't want to see us start spiraling down and we start just expecting, next week it's going to be 10% higher for stuff. So, and obviously, I want to see stocks eventually go higher as well. I don't like seeing my wealth, getting destroyed in the stock market. Nobody likes seeing that. But at the same time, I'm willing to accept a 30% decline or a 25% decline in the S&P or a 30% decline if we go that far, if we can get inflation back in check. So, but this market is rallying not because we're getting inflation in check in these other countries. It's rallying because of an early pivot. That's the risk.
Mitch talked about capitulation, and we talked a little bit about this at the close. How about on Friday? How about that 6.5 billion sell imbalance? I mean, we have not seen, so if you want to talk about, I don't know when the capitulation on this rally is going to be, but there was, I don't know why those guys waited all day. I mean, they have to, right? Because they need the mark. But I mean, if you look at that, we're 150 points off the low. We're 140 points off that close from Friday. I mean, maybe you had some short-term capitulation. I don't know. Maybe, this is it's just another rally that, we'll see where it leads. We got a jobs number on Friday. Maybe unemployment's going to go to 6% all of a sudden.
Yeah, and you got the JOLTS jobs opening today, so keep an eye on that. That's going to hit at 10 a.m., so you guys can keep your eyes on JOLTS job openings. But also, the SPY was just oversold. So it just seems to me like
oversold, man.
Yeah, it was. We
talked about
an extreme, and so maybe we were one day, early, and that usually happens, right? But one thing is has the rally even gone just too far in 2 days? I mean, this is pretty significant move back above the 370.
Yeah,
let's give a perspective.
I'm thinking like 38.50 maybe.
What are you guys thinking?
Mitch, let's give a perspective to your point. I mean, we're way oversold. If you were shorting stocks, we said that. We are due for a bounce. I said it yesterday on the show. There's no reason to sell stocks after we just fell 10% in a week and a half, or 2 weeks. Like, what did we fall in the S&P? 410.
I wish I could
down to 360. What is that move? You're talking about a 15%, 13% move. That's a significant, am I right? 40 handles. Yeah. You're talking about a 12 to 13% move off that last CPI data. And 1, 2, 3, 4, 5, 6, 7, 8, 9, 10.
Literally, you're right.
In 14 days. We fell 13% in 14 days. We're oversold. I said it yesterday. I said, you're going to get more rallies. This has been not easy on the shorts. It's not like,
on
the
the
shorts
50%?
It hasn't been easy on the shorts the whole time. We've had wicked rallies the whole time. The question is, does Powell just turn around and squash this rally in a couple of days? Maybe. Does some Fed, probably.
There is Fed talk today, just to give you a heads up. There are, and I mentioned it to Mitch, and Mitch was like, we always are here.
There's Fed talk on my calendar every single day. So, I know. It's almost like, when do these Fed ever not talk? That'll probably be a better mention. But I think, do we get a 50% retracement from the recent move back towards 384.50s? That's where I can see it kind
I
of
just
getting
said
towards.
38.50. That's a nut. Yeah, that would be that's a quarterly number that comes into play. But if we go to the charts, we go to the upper right chart. That's your daily. I mean, you had a big decline, right? And then you tried, you made a lower high, then you sold off hard, sold off really hard. This was off the CPI number. I think the numbers, I think for the year we were down 24%. I think as of Friday we were down 24% for the year. That's pretty substantial. But I mean, you look at the bars coming down here and they're pretty wide open. Those are big bars. It's, for me, I mean, other people, the way you do your technical analysis, I mean, you might be able to find some levels in here. But for me, it's 83 and a quarter. That's 30 handles away. Then you're talking about over 3,800. I mean, there wasn't much on here on the way down. I don't know if
We
there's
could go
going to
to
be much here back on
3,900
the way up.
easily and still be in a downtrend. We could go up
Yes.
another 180 S&P handles and still be in the downtrend.
Yeah.
There's lots of room. And somebody was making a point, and it scrolled away there on me, but they were saying, it hasn't been easy on the longs, hasn't been easy on the short. It's been a chop fest. It hasn't been easy. What's been easy is fading moves. Like fading overall moves. And we just rallied 130 handles here in 2 days. I'd be taking some profits into it. Now, can we go to 380 or 390? We could. I mean, but I think we're going to shop around. I think we're still in the chop fest. What did we say? The Titanic analogy. We're going to sit here and bob up and down for a while. We're going to do work here at these old lows because you got the real battle between the bulls and the bears. I think eventually the earnings season will take us down because I think it's going to be an epic disaster. But at the same time, we're oversold. We need to chop up. We need to do more work here. We need to sucker in more people, and then we can take us down through the lows. So, but there's lots of opportunities here to play this. I mean, from a day trading perspective, these markets are really good. We're getting, but it's not good for those who are chasing moves. It hasn't been good for those who are chasing moves. Yes, it worked yesterday if you bought the open, but we know I've talked about the 2-day rule on this show for 8 years.
Yeah.
You get a move, a counter move, and everybody gets caught and everybody's looking like that was the bottom. And then they come in the next morning, rah, bullish. We got Australia even pumping it through. And then, after 2 days, they usually pull the rug out from under it again. So I'd be cautious buying it now for the simple reason we just rallied 120 points in 2 days. But at the same time, we got room to 380. We could continue here too. So let's see what happens after the open from a day trading perspective. From a long-term perspective, I'm sitting here at 43% cash, and I'm not jumping in stocks here today.
There was
if I wanted to buy stocks, I would have bought them yesterday.
A lot of people thought, though, and Mitch, and when we were doing at the close show, a lot of people were like licking their chops on the short side, because, and I was like, and actually we took a poll. Was was Triple D selling the rip, or was he just going to wait another day? And I talked about the 2-day rule too. So you probably caught some people that were like, oh, that's nothing. We're going right, we just made a new low for the year. This is a 1-day rally. So that might have exacerbated things a little bit to the upside. But a lot of different factors going into this rally. And I just wish it was other news than what the Aussie Bank did. But what's earnings season start? I keep asking that. I should just
you're a week out from the getting the banks.
Okay.
You're 2.5 weeks out from the mega caps. So you're in the earnings warning season though. So anytime you could get somebody dropping something and saying it's not looking that good. I think the earnings are not going to be good. I may be wrong, but I don't think they were that great last quarter. I don't think they're getting better. So I don't think the earnings are going to be great. I think we're going to be some bombs. To Spinner's point, he made a great point, though. Let's see what the reaction is. I mean, we saw the beginning of last earnings season, Walmart were warning, last earnings season, a few weeks ago we saw FedEx. But we have seen those turnarounds happen too, where a company warns and then they actually, knock them down, but then they kind of buy them. I mean, Micron's response to its earnings was pretty good because they weren't great,
I noticed
but the stock was down,
but
then they turned around and bought it. Simple seller exhaustion. I mean, stocks don't go straight down. They don't go straight up. They chop around. And this has been the year of chop. So expecting us to just go, down from 410 SPY 3 weeks ago and it goes straight to 310. It doesn't happen that way. There's lots of moves. And that's why I think if you're really overweight stocks, I think you use the rallies to lighten up. If you're underweight stocks, maybe you're using the sell-offs to buy. But I'm hesitant on the buy still right now because I'm scared that the earnings are going to be terrible.
Yeah, and now let's go to the Apple news today. We did get some Apple news from Foxconn, Apple supplier, and here kind of battling back what we've been hearing from everybody kind of mentioning the iPhone demand. So they came in here, Foxconn maintaining its full year outlook. And the company said Tuesday that it's cautiously positive on the outlook for the fourth quarter. Thought that was an interesting outlook. What does cautiously positive mean to you? What do you guys think?
What's the symbol on Foxconn?
So you just look at Apple. It's just
Okay.
you could just look at the
Well,
supplier.
I'm just going to make my comment. I mean, they ganged up on Apple last week big time between Bloomberg and Bank of America, and I don't know what their earnings are going to be. I don't know if they're going to warn. I don't know, but it was really, 2 days in a row. The big boys coming out and bashing it. I don't know what the earnings are going to be. I thought I was a little bit overdone. But I'll let the street make the decision on what do they think about what Bank America and Bloomberg did, because the close before that mess started was 149.84. It's actually, let's see, Thursday, Friday, Monday, yeah, well, 150. To me, if Apple had earnings, if people are going to shrug it off, I think it's going to get up to 150 and hold. That's still $5 away. So I think there's still some skepticism about Apple's next
It's easy
earnings
room to
report.
150 on Apple. We've bounced, we've, obviously people chasing. I mean, Apple had a huge move too. We're 160. Look where we were on that day of September, which is literally 3 weeks ago. We were 164 down to 137. That's a significant sell-off for the biggest company in the world. Yeah. So, but I think it's over? No, I think there's still more downside. I think I'd be a seller rallies now. I think it gets to back to 150, and I think you lighten up. I'm thinking Apple is eventually going to retest the lows. I think eventually Apple, I don't know if they're going to warn. I think they could warn. I think there could be another mega tech that warns and brings Apple down as well. I'm scared.
We haven't had any warnings in a while, like a week or so. Oh, we had Rent-A-Center on Friday. But we haven't. We've had FedEx, Steel Dynamic. Who else? Nucor. So maybe that's another reason that we just haven't had any bad news. Like that another.
There hasn't been any bad news. No.
When I read more into the Foxconn situation and the Apple situation, what I think is going to happen here is that there's going to be certain part of their phone. Remember, they came out with the the iPhone, and then they have the Pro, the Max Pro, right? And so what I think is going to happen here is it's going to be a lower demand for their lower tier phone, but the higher demand for their higher tier phone is going to make up some of the revenue. So the revenue is not going to look too bad, but the demand probably is going down. So take that as you want to go ahead and take it. It's kind of like a grain of salt there for their earnings coming up. That's what kind of Foxconn is kind of pointing more to today, is that the revenue still is going to make it there, but there's some lower demand probably for their lower tier phone. We'll see what happens there in Apple, what confirmations we can get. Let's go towards Greg Abel taking up insider stake there. It came for Berkshire A and Berkshire B. And so it looks like Abel's acquired about 68 million of stock late last month, according to filings. The close A shares closed at 413,300 on Monday on New York. Abel's stake in Berkshire owns 5 Class A shares and more than 2,000 Class B shares. Of course, this is eventually who will succeed, at least has been stated to succeed, Warren Buffett.
That's a big buy.
Berkshire Hathaway. They're just loaded so much Apple. It's been so forgiven too. It's like, do people not realize it's 40% or 45% Apple? I mean, you look at the correlations and somewhat there, but someone just doesn't care sometimes too. I think people think just Warren Buffett is safe money, and he's such a great investor, but he's getting older here too, and eventually there will be a succession to try to think about here. I think I'm just selling into the rallies on Berkshire Hathaway. I mean, I'm selling in the rallies and everything, but I think I don't want to be buying this rally here this morning.
It's a big show of confidence, right? I mean, that's what it is. If you want to take it much more than that, you can. putting his money where the mouth is, right? The successor. Looking at the Brick B here, I'm not sure how many people trade the Brick A. Where are we trading? We're trading up 276.75. Pair highs in one area. That's good enough for me. Another couple bucks up. Maybe no daily resistance until you get to close to 279, 278. I see 278.92 is a high, and then 279.13 before we fell off a cliff. That was back on the 19th and the 21st. If you're looking for some more upside targets in Brick B, Brick A, no one trades.
Let's go to Rivian here. As they said, they produced 7,363 vehicles in Q3 2022. Say they're on track to deliver on their 25,000 annual production guidance previously provided.
I'll let you guys.
I just saw the Rivian truck when I was in New York City, and I gotta say, if there's any of the trucks that I feel matches up to like more like a Ford style truck or a GM, Chevy, style truck, I would say the Rivian looks very similar. And so I know that there's a lot of backlash on the Cybertruck because it looks like came from Mars. But I think that the Rivian in the long run might have something there. And they also have the last mile delivery vehicles, right? I think in the long run, Rivian is going to be a company that
I think you're going to see the trucks on the road.
I
don't think it's going away. I think it's just valuation for me. I mean, and everything comes back to valuation. And this is why I haven't liked Rivian since 120, 110, 100, all the way down to $31. We've been absolutely right to not like it because it keeps going down. But, it's bounced a bit here from the lows. It's getting a bounce on the better than expected deliveries. I think Rivian's going to survive. I don't think this one's a zero. But again, what's the market cap here? Let's go check out the market cap. Joel, do the technicals while I grab the market cap.
Yeah, I mean, if you're buying this thing up at over 37, you're doing it wrong, as Dennis would say. We are trading at 34.23, really in no man's land. On a pullback, the top of yesterday's range was 32.85. Next daily target for me would be 35.76. I'm just going to make a general comment about all these single. Well, do they have more than one product?
Yeah,
or they got
they do.
I mean, these. I don't know. I mean, if you can't be bullish Ford or GM, then how the heck can you be Tesla's a different story, but I mean, they only make a couple cars. They don't make that many of them. I mean, I just throw a wet blanket on like all these things. But
So
here I'm driving an old car, so I don't know. I don't see these companies that make one or two vehicles. I mean,
$30 billion market cap, Joel. That's the problem. Ford's market cap, to give you perspective, is 45. So they got this thing 2/3 the market cap of Ford. I mean, we've given this argument with Tesla before, and that argument was dead wrong. We gave this argument, 6-7 years ago. Why should Tesla be worth twice as much as Ford? And now it's worth like 10 times as much as Ford. So, I mean, I think the trucks are cool. I think that they're going to be on the road. I just think from a valuation perspective, it's tough. Like, where is it going? Like $30 billion. It's already a huge company from a market cap perspective, but they sell 7,000 cars. So I just can't rationalize the valuation. Maybe it can grow into it. Maybe it's going to be one of the biggest car producers in the world eventually. But right now it's not, and it's being priced like it is.
I think one of the things that gives Rivian an advantage than most is working with, like they have with Amazon for so many years before they went public. Will give them an advantage, but we'll see what happens. Like always, it's definitely one of those future stories. We'll see if Rivian can do better than Lucid, right? I think that would be kind of more of a comparison that you can do.
Where's the Lucid market cap now? I mean, it's $14. Just curious. Some of these things, if they all came into like reasonable valuations, like $3 billion, $4 billion, and give me some upside, but at $30 billion, where are you growing to? I mean, Lucid at $23 billion. Is it going to be $230 billion? Well, there isn't going to be everybody buying cars. There's just not, the pie's not that big for all these companies to have $200 billion market caps. I mean, Tesla's $830 billion. If that's you think it's going to be the next Tesla, but I don't think Rivian is the next Tesla. I don't think Lucid is the next Tesla. And I'm not even sure they're the next Ford or GM, and that's why it's hard to bet on them with these really lofty valuations, and they're still lofty.
Haven't used this argument in a while, but I just think there's going to be less cars on the road. I just, well, first of all, people won't be
Well,
able
that's
to
a big
afford.
problem because the pie gets smaller. That's a big problem for all of them. If that
Yeah.
happens, you absolutely can't own any of these things.
Yeah.
So that's a whole
That's just the way I
different
feel.
can of worms.
Yeah. Yep. I mean, less cars, ride sharing, Ubering. I mean, how much do you pay in insurance for, how much, you do things? I mean, not that I'm bullish Uber or Lyft or anything, but I don't know. Lots, if you're spending 50K, on a Tesla car, and how much do you drive? I mean, I don't know. Less cars on the road. We don't have the infrastructure needed yet for like the whole driverless car that we were talking about a while ago. But I think it's coming eventually. Maybe not in my lifetime, but eventually.
Money
All
Mitch,
right.
where are you taking us this time?
Let's go to, yeah, that's an interesting one, right? MasterCard releasing some news. Let's do a quick little MasterCard headline, then we'll get to our guest here. MasterCard will, on Tuesday, launch a new product called Crypto Secure that helps banks assess the risk of crime associated with crypto merchants on its network. And the service is provided by CyberTrace, a blockchain security startup that MasterCard acquired last year. So they're trying to do something better for the crypto environment with all the scams that have been going on lately.
I sold out 3/4 of my long-term MasterCard position in January of this year at 360, realizing a huge gain because I thought the stock could eventually go back under 250. Yeah, and its valuation again, the valuation is just again. Here's the biggest problem: is that this rally that we experienced the last 2 years was all multiple expansion. And I was like, I'm looking at MasterCard and trading 25, 27 times earnings. And I'm like, man, I don't see the huge growth happening here. And I'm like, I've ridden this, and this was one of my best long-term investments ever. My average cost basis on MasterCard, I believe, is $16. So it's hard to realize when the whole thing is gained. But then I'm like, at a certain point in time, I'm just like, I don't know. So I realized 3/4 of it, I kept a little piece of it. If I wouldn't have had that huge game, I would have sold it all. But, I kept a piece just because the tax bill was so stomach wrenching when you're doing that. But I just, same reason with Apple, why I've hedged it all out and maybe going to sell it in January, because I just feel like the valuations are so bloody stretched that it just doesn't make sense for me to own these things anymore. So, I mean, MasterCard, you can say, oh, it's so cheap, 290 to 400. But what's the P on this thing? It's like 24, 25. It's not cheap. I don't know.
92, 97, 90. I mean, 4,000 shares have traded. So that was your high from last week. I mentioned 51.25. That was the high from the last week. And the S&Ps, I think if you're looking at anything you scooped up in the last couple of days or yesterday, look at last week's high, because I mean, this 51.50, I don't even know if we're going to, it's one of those days where you just kind of think, ooh, that 61.50, that pre-market high, they're going to have some heavy lifting to get there to get it back up to that area. I kind of wish the market would open already before we leak anymore. But 97.90, psychological 300, that's all it is a psychological level. But do we have CC Lagator in the background there?
Let's do it. Let's get towards some options action. We'll go ahead and bring on CC here. And like always, guys, one thing that I included in the description, you guys can add CC's Twitter and also go on over to optionsai.com and follow along. Take a look at some of the options action. I think they do really great graphical representation of options trades. So definitely check it on out. What's going on, CC?
How's it going? Mitch, I think that options action might be copyrighted. Be careful there. That's the show.
Be careful. Be careful.
CNBC.
Get the NBC Universal lawyers coming after you.
Yeah,
we have the YouTube lawyers. We have everyone coming off after us.
Yeah, they like to come after me. No worries.
How's it going, guys?
CC Lagator, founder of Options AI, and man, we've kind of glossed over options as late. We focus a lot on the equities. Obviously, the equities lead to the options pricing. But you wanted to talk about this high volatility environment, and options are super expensive. We talk about that, makes them, buying them and being right hard. Selling them could be painful too. Just talk about this high volatility environment and how you're approaching it.
Yeah, so this, I mean, you summed it up perfectly. Basically, if if you're out there buying options right now, you're not really, I mean, you could be right on direction, and you're not even close to, breaking even on those calls and puts, especially if they're out of the money. If you're buying at the money calls and puts, they're massively expensive. And so when you have a situation like this where, you've got the VIX above 30 for the last, couple of weeks, you kind of have to change your mindset of, even catching a rally like the last, yesterday and then this morning. You kind of have to change your mindset, and you kind of have to think in a high vol environment. And what that looks like is, you should be looking at alternative ways where you don't have to be, your timing doesn't have to be perfectly right. You're taking advantage of what is a headwind into buying a call or a put. And what those strategies can look like, there's a couple of different ways you can do that. You all sort of mentioned, fading rallies and sort of fading like massive sell-offs and all. A way to do that in the options market is through credit spreads. So, I wrote something over this, this past weekend about, looking at some of these mega cap stocks. You look at like a chart of Google over the last, month, it's just basically been a straight line down. It's almost impossible to time a bottom on a stock like that. But, after a while, with volatility so high, if you do like a credit put spread in a stock like that that's been beaten up over the last few weeks, you don't have to time it exactly perfectly. And you could be wrong for a couple of days, and all you really need is for the stock to come back up above your credit put spread where you sold that level. And if that happens, then you didn't need that follow through, right? So like if you had bought calls even yesterday, and let's say you had bought them out like a month or something, you probably still even need a follow through even after today. If this rally today were to, stumble midday or something like that, then you're sitting on those calls that might still be out of the money, or the break even is out of the money. And then on the, sort of compounding the problem with trying to time a market like this with the VIX at 30 with calls and call spreads and things like that, is that if the market were to bounce, and let's say this did sustain itself, this, this turnaround bounce for a couple of weeks, vol gets crushed. And it goes back, the VIX would be back down near 24 or something like that. And so those calls you've bought have like sucked in value. They've compressed in value, even though you've been right on direction. So I think it's like sort of looking at, specific strategies. And so you kind of have to get out of the mindset of, I'm just going to, I'm going to time this, the bottom of the market, or I'm going to fade this, bounce higher. By buying puts, like buying puts today, you're buying puts at 30 vol. Like you've got to be really right. This entire bounce needs to fade over the next 2 days, or else those puts are going to be, worthless or go down in value.
The reason so many people, and even Robinhood, they don't even allow you to short stock CC. So I mean, if people want to bet on the downside, it's really the only way for them to do it. I mean, I guess you can buy those leveraged ETFs and go that way with the. But it's still difficult. I mean, it's just, and I'm with you. I mean, if I'm bearish a stock, I'm not thinking about buying a put. I short the stock.
Yeah.
So it's so difficult to and this has been a really tough year. I mean, even for long only traders, you just think you're straight down all year. It's tough to make money when you're a long only trader in a down tape. Yeah. So, I mean, I think you just need to open up options and not be afraid to, why, if you're going to be bearish the stock, maybe look at, doing something different instead of, buying, maybe look at selling options, right?
Yeah. And so, this is, I don't know if we've gotten into this on prior appearances, but the sort of regulatory, without me getting in too much trouble here, the regulatory aspects of opening up options accounts, right? So they start you with, you can only do single leg options, right? And so what that looks like is you can buy calls, you can buy puts, and then you can do like a cash secured selling a put, right? And you can do, if you own stock, you can sell a call against it, right? A covered call. So everybody in the audience will know those terms. And that's, sort of the entry into options trading. Now, that cash secured put, you basically have to put up the margin as if you own the stock, right? So you're not really getting much of an advantage of trading options. If you're selling a call, you need to own the stock, which means you have all the margin associated with owning that stock, right? Once you've done all of those crappy trades that have low probability and require huge amounts of margin, then they allow you to do level 3 options trading, right? And so level 3 options trading would be, oh, I don't need to own this stock to sell this call. Why don't I just sell a credit call spread? It's defined risk. I'm risking, 600 to make 400. And if I'm wrong and this stock, goes to the moon, then, whatever. I live to see another day, right? I don't have to put up $1 million to cover if the stock went up 20%. And then the same thing, like this weekend, after your last week's sell-off, which was basically the 4th sell-off in a row, like I didn't know stocks were going to go up Monday, but you kind of had a feeling we were possibly near a bounce. You might be off by a week. Well, the way to do that is like selling a credit put spread, right? And, in some of the stocks you like or in the market, because if you don't need to get that exact bounce, you just need the market to stop going down at some point, right? And so those are the kinds of trades. And that's why those trades look like, they might be 60% probability of profit. Buying a call, buying an out of the money call might be 20% probability of profit. And unfortunately, that's how most people start into their options, sort of journey, is they're basically, it's like going into the casino and they say, you can only play this table with the really bad odds. Like, we're not going to let you at the other table with the better odds. So it's very strange. And I don't, there's reasons regulators do that, but, it's sort of our mission with Options AI is to advance people as quickly as possible to the good stuff.
Yeah, it's just like, to me, I mean, like the PDT rule, but we're not going to get into regulation here. Yeah, I mean, I could do that all day, but one thing that I've been noticing in CC, maybe you've definitely noticed this, is the high vol and how this could continue. It feels to me like we've really opened a can of worms that isn't going to slow down anytime soon. Yeah. How could traders now maybe take advantage of the high vol out there?
Yeah, and I think the market's learned its lesson, right? It got faked out a couple times over the last couple of months on those rallies, where you saw, I'm just using the VIX as an example. The VIX would be up above 30, like 34, 35 on some of those big sell-offs we saw in the spring and the summer. And then the market would bounce and the market would rally. Nobody believed in those rallies that much, right? Yet it was enough to get the VIX back down towards 20. I don't see that happening anytime soon, right? I mean, unless inflation numbers came out and everybody was like all clear, we're good to go now. So nobody trusts these rallies. These still sort of feel like bear market rallies. And until that's, proven otherwise, then that VIX is going to stay high. So what that does is, there's two different ways to play that from a high volatility standpoint, to your question, Mitch. One is, selling vol, right? And there's some pure sort of selling vol plays that you can do. And what that would look like is something like and I'll do the defined risk versions of this, because you can sell strangles, you can sell straddles, but most people can't do that, nor should they, right? That's unlimited risk type stuff. But you can do things like selling iron condors, right? And so you can take a stock right now. I think I was looking at like Amazon last week, and it was sort of like in the middle of a range. And I was looking at like the iron condors out, like 2 months. And I was like, the chances of Amazon being outside of that range, and just to sort of describe what an iron condor looks like, it's basically selling an out of the money put spread and selling an out of the money call spread. And if the stock finishes anywhere in between the two, those two become worthless, and you make that money from selling both of those, right? Now, as a vol play, you might not need to wait around for the stock to finish in between the two. You're just selling high vol. And let's say you sell it with, volatility's 50, and then the market rallies a little bit and vol comes in, well, you can take that off at like 35 vol, and you've made like half your money, your potential income. So that's one way to do that. It's just sort of like a pure vol play. And then the other thing is, that those zones of expected moves are really, really wide with the VIX at 30. And what that corresponds to is the market basically needs to move 3% a week to cover its options prices. And it's actually been doing that, right? Like the SPY, I think, was down basically about 3% the last 2 weeks. And like before that, I think it was down 5% or something like that. But that means it needs to continue to happen, right? You need to see that level of volatility for buying options to make sense. So if you're selling options into like 30 or a 34 VIX, you have a huge room for error, right? And that's sort of what I was getting at earlier with like being bullish via credit put spreads, is you don't have to be perfect. You don't have to get it exactly right. If you're buying calls and buying puts, you basically have to be perfect right now.
Love it. I'm actually going to go ahead and throw up the link that you guys have for the Options University on Options AI there for the Iron Condor there. So if you guys want to learn a little bit more about an Iron Condor, go ahead and check out that link that I posted in the chat.
Yeah, I recorded a new video series. It's like an 11 video, each one's like 3 minutes or something, and people can whip through that. They can fly through that.
Awesome.
Yeah.
We're on the line with CC Lagator. He is the founder of Options AI. So I'm looking at the SIBO daily VIX here. And so let's say we've accepted that there's going to be a higher volatility environment, right? Where would you like to see the VIX come to and stabilize? Because I look at things, I go by the average daily range in the S&Ps, and it's just getting bigger and bigger and bigger, and that's just not a good thing. You'll have outsized moves on the upside and outsized moves on the downside, and I don't see a turn in that yet, even after yesterday's range. Where would be a level where you would, now that we're accepting the higher volatility environment, where would you like to see it come in and just kind of stay still, and then you'd be like, okay, maybe it's okay to dip your toe in the water?
Yeah, so it's been in the VIX itself has been in a fairly predictable range this year. So when we've bottomed out after sell-offs, the VIX has generally been 32 to 34-ish. I think it's been, 35 maybe in its worst moments. And each one of those all year has signaled a tradable bottom, at least, right? Obviously, none of them have been sustainable bottoms. And then on the flip side, I think it got really low this last rally, but when it starts to get down into that 24 and below range is generally an area where I think, unless the news changes, unless the inflation news completely changes and it seems like a sustainable rally, when you see the VIX back in the low 20s, 24 and below, you should probably think about taking some stuff off. And you should think about like selling into those rallies and things like that. Even potentially, given what just happened the last month, maybe even hedging, because at that point, when the VIX is back down near 20, and just for sort of like to set everybody's center of gravity, historically the mean in the VIX is around 19, right? So when you have like the most boring bull markets in the world, the VIX is down in like the mid to low teens. And then when you see normal sell-offs during a bull market, the VIX will spike to like 24 or something, let's say. In a bear market, the VIX, what we're seeing is that the VIX will get up to like 34, right? And then it'll go back down towards 20, and it won't stay near 20 for long because it's only a matter of time before you see another sell-off. The nightmare scenarios that, everybody, maybe except Mitch, is old enough to remember, like in our chat, when you see like the great financial crisis, that kind of stuff, that's when you see the VIX like 60. And those are like the craziest moments where you basically can't even trade options that day. Like it's just, stuff is so out of so crazy. And those moments last for about 10 seconds, right? So it'll be like the VIX will be 60. That's basically the bottom, but who cares? Because you can't even trade, right? And those moments, so that sort of 34, Joe, like that 34 to 24 is basically how it's been trading recently. And like, on Friday, I think the VIX closed 32. It was like almost right there.
Gotcha.
Yeah.
Okay. I want to address this one question. I think I'm going to get it right from Jim Morgan. If volatility remains high, doesn't that negate the premium shrinkage problem? You're selling puts into calls in the high volatility environment, but then you're also buying them back in a high volatility
Yes, it's a great question. And so basically what it's doing, I think it's the best way to look at it is it's built-in room for error for you. So if you are selling, high vol, the highest vol of the year in Apple, you've built in so much room that Apple needs to move for you to be wrong, that it's covering for the fact that you might not actually be able to buy vol lower, right? Like if you're pure IB trading. Now, if you saw the VIX 35 and you wanted to do a pure IB sale, you're probably going to get a chance. Like you're either going to be wrong and the market crashes, or the market's going to bounce and vol will come in enough that you could actually have done that pure vol trading. But I think to answer what's a really good question is that expanded vol has you're benefiting from trading on the other side of what is a headwind for everybody else in the market. So it's built in extra room for you to be correct. And so, and especially the way I would think of vol versus like expected move trading is if you're trading anything in the next couple of weeks, you're basically not trading vol. You're trading how much this stock could move. Like volatility is pricing, $10 in either direction. You're either going to be right or wrong if you're selling options or buying options. If it goes up 15, you were wrong if you sold options, right? So when you're trading vol, I generally think of that as like at least 45 days out, I would say. And so that's sort of like when I was a market maker, I thought of everything in that front month as gamma, and I thought everything of like the second, third, fourth month as vega, vol. And so that's a good way to think about it is if you want to do pure vol plays, look out farther. And I looked at like the VIX curve, I think it was yesterday. It's kind of flat. It's sort of like 29 all the way out. So a lot of times what you'll see is like the front month VIX 35, and then like 2 months out, it'll be like 26 or something. It doesn't even look that right now. It's pretty flat. So if you're doing pure vol plays, like go out 2 months, basically 2 expiries.
Give yourself a little bit more of a chance going out. Right?
It's pure vol out there. The movements matter less. Whereas if you're trading like this week's expiry or this month's, it's all just the movement. You're flipping a coin as to how much the stock moves, basically.
Jim Morgan says, nice, great answer. Thanks, guys. CC Lagator, founder of Options AI, talking options to us layman people, just trying to understand what's going out there. Thank you very much, CC. We'll get you on there again soon. We look like we have Triple D in a full trade mode here.
No, I'm here.
Okay.
I'm always listening to CC. Like some people you come in, but CC just talks so well and answers everything so well. You learn so much, because he's in it. And I mean, the spreads tactics. I mean, yeah, that's what people do wrong is they just come in on buy puts, and I'm going to make some money here. We'll sell something else against it, because that premium when your VIX is over 30 just destroys your profitability. So, I mean, just buying puts, I mean, it's a tough game. So, playing through the spreads, playing different ways. If you're an options trader, definitely follow CC.
It's just one thing, too, is like if you're just one day off, like in an option, like you think, okay, I'm going to go for this pot, I'm going to go for this strike. And then you're off one day and it has like a big drop. Then you're just battling uphill. It's just, the timing has to be perfect. But we're bouncing around here, Dennis. I don't know. Are the stocks? I see the stocks acting pretty good here from what I'm looking at on a percentage basis. We have the SPY up 1.58%. I see, some things a little bit more, a little bit less. How do you think the stocks are reacting to
I'm going to say it again. When the VIX is over 30 or 29, 30, stocks all move together. So if you look today, everything is green. You look yesterday, everything is green. Then you go, everything is red. You're like, why is that? Because when it gets a stock is a stock is a stock, when you start getting the VIX over 30. As we start to come down volatility, then you'll start to see rotation and separation. But, the way I trade it, when VIX is over 30, a stock is a stock. And everything starts moving together. So you got to understand those relationships as well. And they change, they're dynamic, and they change with the VIX. So VIX coming down under 30, gets down to 24, 25. Then you start to get into more normalized markets, at least a little bit more normal, and not everything's moving together. I mean, oil's up today, airlines are up today. I mean, that's a perfect example. In normalized markets, oil's going up, it's not good for airlines. But in these markets, everything just kind of moves together. You get, Exxon Mobil trading up 1.8% here, and you got, Southwest Airlines trading right along with it up 2.34%. Welcome to a high VIX. This is how it works. Those normal relationships don't exist when you get the VIX over 30. So just keep that in mind as a trading lessons for you.
We did get some news to hit the tape while we were doing the show, which was the Micron news, and I saw the chat mention it too. So shout out to everybody that mentioned it. So Micron pledging up to $100 billion for semiconductor factory in New York. This is coming from the New York Times.
How much?
$100 billion.
Significant.
Wow.
That's tax credits. You remember New York. New York has a really good tax benefit if you can go to northern New York and kind of establish there. So looks like they're getting some kind of help, more than likely from New York, to kind of get this out. But $100 billion, that's a lot.
I'm not chasing it here. I'd say 53.45. That's what I would focus on. If you're long Micron, that was your September 15th high. You seem to be congregating there. Next daily high, 54.23. Triple D, anything on Micron or the other?
I'm still long Micron
chippers?
in the long-term portfolio. I'd look at a 50% retracement of the move, 65 down to 48. That's 17.
Ooh.
So we'll take another 9 up from the 48, and you get to like 56 to 57. I think you're running into trouble in that area.
Wow, that's a little ways up there.
No,
all right,
but I'm not saying it's going there. I'm saying if it
no.
gets there,
I mean, no, you're looking for something. No,
it's all this way. So when you get these big moves, now I'm looking at 50. We're starting to get a little bit of a rally. So I'm looking at some individual stocks. I'm holding up well. I'm looking, where's the 50% on these things? Support, resistance, trends, 50%. There's your technical analysis lesson. All you need in 5 seconds.
All right, let's go to the analyst rating. We're getting an upgrade in Gilead today, and pay attention to Gilead. They also got an FDA approval for a viral vector manufacturing facility in Southern California to produce a commercial product. And the upgrade helping here, JP Morgan coming in with an upgrade. Prior was a neutral, moving it to overweight here, raising the price target to 72. So not the worst price target there, but the prior price target was 72. They raised it to 80 there. So
Gilead's been dead money for 6 years here. We're at the same price we were. Didn't participate in the bull market whatsoever. Everybody's in it for the dividend. 4.55% of those dividends are less attractive when you got higher rates on cash. So I think there's no reason to own Gilead here, in my opinion. I'd fade the JP Morgan upgrade.
Let's see if I can get this in here. I got a 3-star for you, folks. If you're trading this,
technically,
yeah,
this
I
thing
mean,
is
it's opening
at
up $1.90, opening right into that area. I got to make it a 3-star. There's 3 highs there, so that's what you got. That's all I can do. $1.90 moving off an upgrade. That's a big move. So take your target if you want it. If not, things open up. I didn't realize this came in so hard, but and so did the market.
Well, it was the selling of everything dividend plays. People hiding in.
Okay.
Oh, it's got a nice dividend, 4%. Is a dividend nice at 4%? We get 4% in cash. Not that nice anymore.
I heard Cameron on CNBC yesterday, and she was talking about looking a little bit longer term. Yeah. And she said she was talking about the healthcare stocks, this sector. And then what she also said that I thought was interesting. She said that this capitulation that you're seeing, like in the XLU here, maybe this is just because this was the safety trade, right? Maybe maybe people are saying this ain't, you know, maybe it's time to do some real asset relocation. And, you know, this trade that was a safety trade, we were in it. And now I'm not talking about ARK and I'm not talking about, you know, real, you know, speculative stocks, but she was looking at this as, you know, maybe, you know, this is good. It's good for the market. Maybe people are going to get a little bit more risky, but
And it's sold off. We've had a significant sell-off in the XLU. Come in short in XLU now. It was $78 3 weeks, goes to 65. So it gave back its entire move for basically the year in 3 weeks. I mean, these are big moves. I think, you know, I didn't make sense for me at 70, 72, 74, 76, 78. It doesn't probably make sense for me at 68. But I've got to respect that it's very oversold, some of these utility stocks. And if we go to get, you know, a Fed pivot, which I don't believe is going to happen, but if we start to think like that, the market starts to think that's going to happen, they'll buy utility stocks, because the only reason they're getting hit is because of the higher rates. They need the rates down for utility stocks to go higher. Utility stocks will trade off rates.
All right, I'm going to hop here. I'm going to tell you, you know, the pre-market high there is 61.50. I can't get 51.50 out of my head because that was last week's high, so we'll keep an eye on that. Also, you know, for your perspective stocks, I mean, not everyone exactly the same, but you know, if you did a, you know, a swing trade the last 2 days and you're looking at, you know, follow through or potential targets, I would take a look at your high from last week, because this is a pretty big advance. So good show today. Good thing for the Australian bank to help us out today. And everyone have a great day. Back with you guys later on.
Have a good one, Joel. I'll get you on out of here. Dennis, have a great trading day. We'll see what happens today.
Chop, chop, chop. That is what we're in. 2022 has been the year of chop. How do you play chop? You fade moves. I'll keep saying it because it's working.
Yep, that's the truth. We're going to go ahead and start wrapping on up. I'll get Dennis on out of here. Last message I wanted to bring in was some coal news. I've been bringing it up to you guys a little bit late just because we might not be able to always catch it, but keep your eyes on some coal stocks out there. BTU has made a big drive recently. What's going on here? Well, news like this from Danish authority company Ørsted stating here that they are putting some coal factories back to work. So they're going to go ahead and get these ready to start kind of getting a primary source of fuel from coal. And of course, what is this an alternative to? From natural gas. And so if you're wondering why natural gas hasn't really kind of breaking out, well, a lot of that I think is the outlook that coal is making the first run. Do I think natural gas eventually breaks out? Yes, but I think coal is going to get the first kind of move here as you're seeing stocks like AMR, CEIX getting some lift. This was one that I've been giving about for 2 days now, has made a nice little move in 2 days, about 15%. So keep your eyes on maybe some laggards like METC, or you can look at NC, maybe ARCH, kind of lagging back, trying to get back onto the 200-day moving average. This is something to keep on watch. Is this the right move or the wrong move? Might not be it, but I'll tell you right now, definitely coal has had a big jump up in the last week. We'll see if it pulls back today, but something to keep on watch with the story. I'll get you guys on over to live trading on next. Let's get you over. This is where we go ahead and take a look. Remember yesterday, I gave you guys what? What stock did I give you guys? I gave you guys FSLR right before the bell here, right before we closed on up. And I told you guys about the rule of 3, right? We were looking for a push above the trend line going towards 136. We got that yesterday. And there's your breakout in FSLR towards the high. You guys could have got this right on live trading, or maybe you guys caught it at the end of pre-market prep. But if you want to find out more trades like this and learn some more strategy, come on over to live trading. That's where I'm killing it every day. And of course, I got Lord Ryan with me today. And most of the times get our YOLO action Zunaid in there. So come on over to live trading. That's coming on now.